Hi, good evening, everyone. I think we have people coming in.
Good evening. We should wait for some time.
Yeah, I mean, it's still not 5:30. Uh, I would request all the people to join only through uh, the link, through the attendance link. Amira, is it right? Because I'm just getting request for uh, accepting on the panel.
Yes, we request everyone to use the joining link that is circulated.
Okay, I think it's already 5:30. Amira, would you like to uh, initiate the discussion?
So I think we should start the session now. Good evening, everyone. Welcome to an interesting webinar on transfer pricing, mastering remuneration on natural persons, the arm's length way. So before we begin this session, I'd like to give a quick introduction about TransPrice. TransPrice Tax is a cross-border tax solutions firm with a strong presence in India and the UAE, along with the global footprint through Quantera Global, a prominent network specializing in transfer pricing. I am also excited to introduce our speakers, Ashna Mulgaonkar, Managing Partner of TransPrice GDT Tax. She has nearly 2 decades of professional experience in finance and administration within the UAE, and she is a highly regarded chartered accountant and tax consultant. Her expertise extends to various areas with taxation and accounting. And we also have Akshay Kinkre, founder of TransPrice Tax Group. He's a highly skilled cross-border tax advisor and a chartered accountant by profession, specializing in transfer pricing and international taxation. Akshay is a passionate author, having published 4 books on taxation. So before we start, I request you to keep your mics on mute at all times. I also encourage you to ask questions by typing them in the Q&A section, and we shall address them at the end of the presentation. Without any further delay, now it's over to you, Akshay and Ashna.
So, thank you, Amira, for a nice introduction and setting the stage. Very excited today for doing this particular webinar because the topic is so interesting. I think we have got a tremendous audience here. One of the record-breaking participation by most of you, I think, around the world, and very happy to be talking on such a topic. Okay, uh, be audible. Okay. I've got a feedback that I'm not audible. Am I audible to all? Can Okay, great. So maybe also check the speaker. So thank you. Okay, any questions that you have today? Amira, can you go back on the slide, please? I think you have gone ahead. Any questions that you have today? Of course, Q&A is something that you can use. Uh, we can give good amount of time on Q&A because the presentation is what we have done is we have covered quick topics and something that will be of great use to you and practical importance, right? So the corporate tax is recently been introduced in the UAE, and of course there is a lot of discussion around it. A person with an IQ of 160, Mr. Einstein once said that income tax is the hardest thing for him to understand, and we are still normal people. But he didn't tell you what makes income tax the most hardest thing. And when I did that research, I felt transfer pricing is one of that means which makes it very hard to understand because transfer pricing is pretty principle based. It's subjective, and unlike any other tax regulation, right? It's not the rules. These are mainly open to business and business interpretations, and which makes it tricky because what may apply to one business may not apply to another business. So every time we have to look at the nuances of what one industry and the dynamics need to play versus the other. So transfer pricing, when it comes to any field, you have to dig deeper, have more of an understanding of the subject as well as the factual situation. But before getting into the crux of transfer pricing, let's look at our daily lives and see how do we generally make a decision. Because whenever you go to shop, you always are looking at one product or another, and you ultimately choose one product, possibly because you're always comparing in your mind what are the characteristics of the other product which I'm not buying, or what are the characteristics of the product that I am buying for. Okay, let's take a simple example. If you are going to a restaurant, first of all, you will select the restaurant that you want to go to. Second, you will select the cuisine that you want to go to, right? Both of these have a lot of decision making in your brain, and that's what you do. But because you're naturally tuned to doing and making those decisions, you undertake comparability on your own without a particular process to follow. Similarly, in transfer pricing, because it is a subject, it's ultimately all about comparability. So every business decision that you are taking, which is related to related parties or associated enterprises or groups, every time you need to compare yourself with, say, other conditions in independent circumstances. So right from childhood, life has already been preparing you to be a transfer pricing professional, just that you never recognized it. Few of them did, and we became transfer pricing professionals. Now we keep on comparing everything that we see. And that's what we have to do also in the UAE when we are looking at the financials and different type of businesses. And that comes to the next question that we need to look at. Why do we have to always compare? So, Ashna, if I can bring you in a little bit here, why do we compare in and always look at answers what we need to find when we are talking of managerial remuneration, when we are talking of directors remuneration? If you can throw some lights around it.
Yeah, so Akshay, comparability, I would say, is like the main pulse or the cornerstone for the application of the arm's length principle in transfer pricing. Throughout our life, we have always heard our mothers saying, don't compare yourself with others. But transfer pricing only works and starts from comparison. So, in corporate tax law, requires the related party or the connected party to earn their fair share of profits. This can be arrived only by applying the arm's length principle, wherein each connected person or the related party will record their operating profits in line with their respective functions that they are doing. Only then you will understand what is the net profit and where it be allocated correctly. The principle states that the price agreed in a transaction between two related parties must be the same as the price agreed in a comparable transaction between two unrelated parties. So comparison is the crux and the pulse in transfer pricing.
Yeah.
If you see the corporate tax law, the entire law is is crafted around 70 articles, but the in transfer pricing, the focus is around only a few of the articles here, from 34, 35, 36, and documentation comes under 55. If you see the summing up is only under 4 or 5 articles in the entire corporate tax law. But today our focus will be on connected party, because it's very important to understand this term. What is connected party? How
So,
do you? Yeah,
Asna, generally I've seen the transfer pricing law is a very thin law. And when there are references made to, say, managerial remuneration, so directors, that's only one line items, right? But the biggest book ever, which I have seen, is on transfer pricing. One of that is just behind me. So it's this thick. So a law which is as thin as possible, people have written thesis on it, and still you will not be able to find all the answers, right? So it's very circumstantial. And I think that's what you are also trying to say.
yeah. And but UAE corporate tax law is all around transfer pricing. Just that it has been shortlisted in a few of the articles. But if you read deep and you really try to decode it, you'll understand how much it is focused around transfer pricing and OECD guidelines. So, a little about connected party here. This connected party term is very new in the UAE law. If you see US or if you see India, this term you'll not hear much, because there they refer to it as associated party or related parties. So, connected party, what is this term connected party? Connected party is any natural person which is related to your business directly. It can be a director, it can be a shareholder, it can be an officer, or it can be a relative of all these people. And if they are directly connected to your business, and if you are transacting or paying them anything, then it is very, very important that arm's length has to be maintained. Classic example is in Dubai, there is a law where you had to have 51% as a local. He was just direct shareholder of the business. Though you can now have the licenses without the local and 100% expatriate, but these licenses, the shareholding was with the local, but the control was with the expatriate. So this is a very jurisdiction specific case, we can say. So how would you understand what is the underlying transaction? What are the payments made to this connected person, and how would you benchmark it? This is where the study will have to be focused on.
I think Asna, the whole regime of Dubai corporate tax or UAE corporate tax, I keep on saying Dubai, but it's UAE corporate tax, right? The entire regime ideally is only corporate tax. If you see other countries, if I talk of India, right, it is income tax, which also covers personal income taxes, which possibly covers income from house properties. It also covers income from other sources. Now, all those characterizations and distinguishment is not there in UAE. It only talks about if you are doing business and if you are earning any profits by doing business, those gets taxed. So you have two differential regimes. I'm not talking of free zone and mainland. I'm saying there is a taxing regime and there is a non-taxing regime. And let's say salaries, that comes under a non-taxing regime because it is personal income, right? So there is inherently a tax arbitrage in a country. And because of that, transfer pricing regulations need to be viewed in such a way that both of these gets covered. And that's the reason why connected person came in. And this is also a reason why connected person is not there in most of the other countries.
Okay.
Like India had for a very small period of time something called as specified domestic transactions. And we have similar to connected persons under section 48(2)(b), which are persons of significance, includes directors, people who have more than 20% direct indirect shareholding. All those are covered. The government did put certain transfer pricing principles onto them, but that is now rolled back. They say that you cannot really test them under ALP. It's getting too much of compliance because in India you had taxes also on the personal income. So if you're talking of corporate tax at 22% versus personal income tax of 30%, people will prefer paying corporate taxes. Yeah. So
Yeah.
because of tax arbitrage, I think in the UAE, it becomes of a higher significance that every company operating in the UAE is taking care of transfer pricing even for their director remuneration, even for their managerial remunerations, right? Right. So that's the point I wanted to also say more from a India perspective and comparing it to the UAE jurisdiction. So, okay, who gets impacted? So, Ashna will definitely need a lot of guidance from you around who gets impacted. But what comes to my mind is mainly those companies which are single owner companies, right? Where their control is very high, a single person making a lot of decisions. So, when he's withdrawing his salary or his share, how the treatment would be. So, those type of people will get impacted. Your family offices or family groups ultimately, which are doing businesses. All those partnership firms like uh, advisory partnership firms, because there are partners who are getting salaries, partners who are getting remunerations in one form or another, those will get impacted. And also those companies possibly where there are a board of directors, a governing board, and there are payments going to them. So all of these needs to be evaluated, and especially more than larger companies, right? I feel it's small and medium enterprises who will have more impact and more issues on transfer pricing around this particular aspect of directors' remuneration rather than anything else, because there has been an exclusion on the listed companies overall. Moreover, there are terms like officer, control, interest, which still brings in a lot of subjectivity to the topic. Like who would be an officer? If there is a company which is formed and say if there is an officer appointed to take certain decisions, whether that officer has enough control or a significant influence to undertake certain decisions. As you said, your example of 51% was bang on. So certain terms like these are open to interpretations overall. What's your view around that?
So in Dubai, there are certain licenses which are very, very, I would say, natural person centric, like civil company. There is a type of category of license in Dubai, civil company, sole establishment, LLC, then unincorporated partnership. All these terms are very, very natural person oriented licenses and which are driven and controlled by the natural person underlying these licenses. So for these licenses and these specific cases, these terms will all be related party, connected party, and the payments which are going to them will have to be at arm's length and benchmark. One thing that I want to bring out is if you see the natural person guide, what you said in your previous slide, you rightly said that in India why this connected party term is not there, connected persons term is not in India, and it is here in UAE, is because there is a particular license in UAE which is called a sole establishment license, which is owned 100% by the natural person. And this license, a natural person and a sole establishment, their liability is inseparable. So any payment which is made to this natural person, they have specifically said will not be allowed as an exception or expense. Because, as you rightly said, that if if the business is making a payment to the natural person, and if they allow it as an expense, then what is the difference remaining between that business and the natural person? So entire income which will be in the hands of that natural person or the business will be his net profit, which has to be taxable. So it's very important to understand what type of license it is, what activity it is, who are the connected people around it, and then understand what you need to benchmark and what has to be at arm's length.
So I see two important messages from what you are saying. First of
Mhm.
all, a natural person, if he's doing business as a sole proprietorship, that's how generally the world understands it, right? You cannot be paying yourself and taking a deduction against it, right? That's one logic. Second, if at all you need to look at and claim a deduction, don't do business as a sole proprietor, right? Maybe incorporate a company, start doing business through a company so that any payments also coming to the founder or to that natural person would be taken as a separate person and a deduction overall. So I think there are two messages hidden in what you said, which is very important. While because India doesn't have the license Raj now,
Yeah.
we recognize things as sole proprietorship and also globally. But I understand the way how UAE is structured, and that's a valid point also to put it in the law. So great. Moving ahead, I think it's also important to know what type of payments could get
Payments will be
impacted, right?
impacted.
Yeah. So Asha, would you like to just quickly cover this?
Yeah, so once you have understood that it is who is the connected and related party in your organization, the payments that you make to these people in the form of the profit payments, like revenue payments, not in the capital nature. Any payments which is made, which is impacting your profit and loss account, are the expenses that has to be at arm's length, is what, if you want a deduction, and everybody does that for deduction only. So I can see the nature of payments such as salaries, directors' remuneration that we are talking about today. One of the important one is there are directors who work as advisors also. So these payments which are paid to them in the nature of advisory will also need to be at arm's length. Commission is very prevalent in UAE, because it is linked directly to the business and the amount of revenue generating capacity. There are business development manager, which directors act as business development manager. So bonus is one of the major uh, payments that is paid from the companies to these directors. Management fee can be very, very critical here to understand uh, what nature of expenses is going to be paid to these directors, and how it can be pulled out in your profit and loss account and still get as an exemption for the expense deduction for the expense, is going to be is going to be the study that we have to all look
Yeah,
forward to.
so maybe let me give a quick scenario here, Asna, to what you are saying. So let's say
Mhm.
there is a group, and say domestic group, and there is a holding company and there are subsidiary companies in the UAE itself. And you have a CFO who has been appointed as one of the significant decision maker on the finances at least. And he's a group CFO. So he's making decisions for say 10 group companies along with the holding company. The payment goes from holding company to the CFO. But because he's working for the entire group and functionally is responsible for 10 overall companies, we cannot compare him to a CFO of one company. He definitely would be getting a larger chunk. Now, in such a case, how would we ultimately defend the payment going to the CFO, which also could be reimbursed by certain subsidiaries, whether you will net it off, not net it off? The guidance is not very clear around it. But I think a lot of logic will prevail, and we will need to take certain calls, positions, and decisions while you are undertaking the transfer pricing documentation between, say, the group company and the subsidiary company. So it's just not that you are paying to the individual; it's also when the subsidiary pays to the parent company, transfer pricing rules and regulation needs to be thought through. I think, Ashna, you mind I take one question here because I feel it is relevant. People have started asking questions. So maybe one question if I take now and rest
Yeah.
all maybe later on. Yeah. Can we say an executive officer or a COO be considered as officer for the purpose of connected persons? Question number one. Extension of that. Also, whether the salary paid to the executive officer or CEO are grouped under the salary to KMP in the audited financial statements as per accounting standard. So the answer to second is yes. Uh, but maybe the first question's answer, Asna. Do you think that COO is an executive officer or considered as an officer for the purpose of connected
I
persons?
I can't see the questions only. Uh,
So Asna, those are in the Q&A section. So whenever the question comes in, I will surely pose it to you.
okay.
Uh,
Can we say
so
executive officer?
can we say that the executive officer or CEO be considered as an officer for the purpose of connected persons? Ideally, yes, right?
Yes, ideally,
Yeah.
yes. Why not? Depending here, we'll have to understand what functions he's carrying out and what role he's playing. So it is very important to first list down the functions of the director, list down the function of this officer, and then you have to then you have but whatever specifics of the case you have given here as executive officer or co be considered officer, yes, it will be considered an officer, and it will be considered as a connected person to your business.
Yeah, ideally the designation doesn't matter, the role and the functions and the decision
Functions
that
is
he's
what you have
undertaking.
to do.
I'm hoping in the section both of them are aligned. Okay, great. Moving ahead, before getting into the specifics of salary benchmarking, the principles of transfer pricing apply very similar across to salary benchmarking. And hence, it's important to understand the basic transfer pricing principles and the minimum things that anybody needs to do under the transfer pricing regime. So ideally, I keep saying this that any TP regime is the 3D principle, which means before you get into a transaction, you need to structure your transaction. It's almost like how a architect is structuring your house to be made. You don't start directly laying the bricks to make your house, right? You make a plan, you make a blueprint, and you say over the next 6-10 months, what is and how I'm going to put my bricks across, what is the quality of bricks, all those things, right? Similarly, in transfer pricing also, the way you are going to do a transaction or the way you are going to pay the managerial remuneration, in which form, including the agreements and all, needs to be decided upfront before you get into a transaction, right? Once you have got into the transaction, you need to document. TP is all about documentation. That's the second D I'm talking of. You have to document while you are getting into a transaction. You have to document after the year end. You have to document while you are submitting to the tax authorities. So everywhere what is documented is something that is real. What is not documented is only story good to be heard. So please keep documenting whatever decisions are you taking on your personal remuneration level. That's a key. That could include your board minutes, that could include your position papers, that could also include your discussions with your consultants, your transfer pricing policies, all those things. Yeah. And ultimately, the defense or the dispute resolution, proactive or reactive, that's the third D that generally I refer to. This is when all the documentation and the efforts that you have put in, you will have to showcase before the tax authorities to prove your arm's length nature in transfer pricing. Yeah. And this is typically how a journey of transfer pricing looks in, divided into 9 parts. But if you see, the 6 out of 9 blocks are the blocks where you have to plan. So transfer pricing is all about planning. And ultimately, when it is planned well, it will be executed well. Yeah. You have to start with stating out the objectives of declaring a managerial remuneration. Those objectives could be personal, those objectives could be organizational. Let me give you an example. If you are a single owner company and if you want to undertake investments through the company, then if you withdraw certain salary out of the company, then you are not able to meet the objective of reinvestment in the company. Otherwise, you will have to pump in money again as share capital and reinvest it. So it's all about the right objective at that point of time. So set your objectives upfront, discuss with your transfer pricing consultant. Then finalize on your connected persons or related parties. So your one business could have 10 connected parties or connected persons. Don't identify only 3 of them and start documenting them. If there are 10, then you need to be sure that you have completed analysis around all 10. Build a transactional map and see who is getting paid what for which function. Yeah. Again, involve your transfer pricing professional here. They will throw a lot of light on this. Then build structures which are in line with other businesses also. Try and do something which is more likely that is done rather than doing something very different in transfer pricing, which means follow normal business circumstances and normal business principles. Don't be too off and build structure for doing those work. Document these decisions in the board minutes, as I said earlier. Undertake your benchmark studies. Benchmark studies are comparable studies where you try to prove your transactions are in line with what transactions are undertaken by independent parties. This is more of factual. Then you need to get yourself uh, uh, into an agreement with your connected person or related parties. That's called as an intercorporate agreement. That's the ICA that is written here. It will lay down all the legal terms and conditions which are very close to the actual substance of the business transaction in itself. So I will repeat, identify the connected persons, structure it well, pass it in the board of directors meeting, undertake benchmark studies, get into intercorporate agreements, and last but not the least, document all of this in a policy which showcases the intent and the way how a particular transaction is undertaken in your organization. This completes your planning. right? Once this is done, your pipeline is made. Once the pipeline is made and it is clean, if you pour water from one side which is clean, on the other side it will be a clean water. Then all that you need to do is monitor, document on your yearly basis, undertake compliances, and then represent to the tax authorities. So if your planning is well done, all your execution will be easy to execute. Now, typically, even for managerial remuneration or a director's payment, there are 5 methods which are prescribed in addition to one more method, which is called as other method in the UAE transfer pricing legislation. You have the CUP or a comparable uncontrolled price method, which is very close on product comparability. For example, you have Ambani and you have Adani. And of course, you will have your Ambanis and Adanis in the UAE too. So those Ambanis and Adanis need to be compared. Now, Mr. Ambani will say that I am not comparable to Mr. Adani, but you need to take the differences out, undertake those adjustments, and then compare under the CUP regime. When I'm talking of cost plus and resale price, somewhere these methods may not be directly applicable to payments for key managerial personnel. Now, transfer pricing is not an exact science or law. There could be many innovative ways in which certain benchmarkings and comparative analysis could be undertaken. So if any of these methods apply at that particular time, it's well and good, right? So what we are discussing right now would be only as per experience, and we are not giving you any magic solution to benchmark director remuneration. We are only going to give you experiences, which I feel are more falling either under CUP, transactional net margin method, or the other method, where none of the method really works. We have to go for any other method. Now, CUP is predominantly a price-based approach, while others are profit-based approach. Your other method could also be one of the price-based approaches. So keep in mind, we generally have to attack on CUP, TNMM, and any other method while we are looking at director remunerations. Moving ahead. Now let's come to the crux of the matter, where we are going to discuss on various benchmarkings for the managerial remunerations in the case of UAE. The first being very simple, if there are internal references which are already available with the taxpayer or the group of taxpayers, right? You try and compare to what is already available internally to your system, which could mean there is a director which is a connected person and you're making a payment to that particular director. Also, there is another person who may or may not be your director, but undertakes similar functions. And there is a payment being made to that particular director, right? Or maybe a non-connected person. Whether you can compare these two salaries, yeah, that could be one method to look at. Second, whether as per HR, you have salary bands that you follow, which are more industry driven. So these are all internal references that you can use yourself to benchmark certain basic level of salaries. And when most of the directors are getting paid at similar levels, in this case, right? Documentation around functional way of they doing their work is very essential. So your job descriptions, your KRAs will have to be very, very properly documented. Yeah. Asha, what's your thought on the internal references? You think such information would be easily available with the companies in UAE?
Yeah, so Akshay, in this particular tool or method has been will be helpful in the industries which are like in hotel industry, which are spread across many regions. So then you can have internal references around. But if you have a single owned business, or if you are more of, promoter driven businesses, then perhaps it is very difficult to have a similar comparison internally. But if you have a business which is spread across, then definitely internal references is a very good tool that is going to help businesses here. One of the nature of business which I can think of which can adopt this method is a hotel industry. If you see a hotel industry, there are a lot of data which they have internally across. You take any chain here, Rove, Hyatt, all these have different many chains around, and similar roles are being played by third party as well as internal directors. In such industry cases, this tool can be very, very helpful, is what I understand from it.
I think including hotel industry, it could be any business that is spread across and maybe which is not listed because listed companies are exemption.
Yes.
So wherever they have bands, wherever there are information easily available. But the ironical thing is with companies like these which are bigger, uh, accumulation of all those information at one place and access to the information because of secrecy is of paramount importance. So it will be a tussle between, say, a tax guy and an HR to ultimately see how these internal references could be used, isn't it?
Only one drawback which I see major here is that, if a company needs to be, a company will have to be need to be aware of their competitors also, and not just rely on the data which is there internally. Because finally comparison is with is a similar line of business, or when you're paying out. So it's important what your competitor also offering for that particular role.
Correct. So that could be a potentially different method altogether. But when you're looking at a payment made to directors versus a payment made to an employee who is acting like a director, who is a non-connected person, I think internal reference as a starting point is a very good point to start with. And then we can
Yes,
expand in getting into other methods. First of all, one disclaimer which I gave a little bit earlier also, these are only experiences which we
experience.
have used in other countries to benchmark a director remuneration, right? These are not 100% methods that we are talking of because there is no one foolproof method in transfer pricing for any transaction. So in TP, it's all going to be experiences. It's all very circumstantial. And if there is information available, then internal references could be a great starting point because
Yes.
there are enough cases in the public domain globally which says that any internal reference is always preferred over external references. Okay. I think the
Mm.
next, yeah, next, I think when you're talking internal, you have to talk external. So yeah, so there are published data. There are maybe in the market there are sites which are paid sites where you can go and benchmark your own salaries, right? To name a few, it could be PayScale. Yeah, there you go and you check for whether you are paid at an appropriate rate or not. So your entire exercise of going through that site needs to be documented in a particular way, and that could be one external published data. Second, there are research reports of various industries that talks of salary payments being made to the directors, the top, say, scientist, maybe a data analyst, right? All those public reports could also be used in a way to document a transfer pricing analysis on what is being paid to the connected person. A third way, which we have used quite a lot in India when specified domestic transaction was put in, is to approach an HR consultancy firm. An HR consultancy firm often they have various data which they have arranged for a particular industry on what type of salaries those people are driving. Yeah, and I'm not talking of very smaller time HR consultancy firms. These are bigger HR consultancy firms who generally hire CXO levels, right? And we can take an independent certification from them specifying a range, or they can provide your transfer pricing consultant with a data range through which an interquartile range could be adopted to say this is your arm's length range and your CXO or a director should ideally be fitting into that particular arm's length range. So an HR certification or an HR plus TP consultant certification could be a very good way of utilizing the external published data. So you have your sites, you have research reports, you have your HR roles. So Ashna, whether all of these would help on the UAE side, do you have those information available?
Yes, so external benchmarking is a extremely useful method in terms of UAE jurisdiction, I would say, because only thing is the company will have to put a little more effort. When you say internal references, the data is internally available, but when you have to say external, then the company has to rely on consultants how to gather this data for the benchmarking. But an organization will have multiple options here. Plus, there are a lot of data sites, HR sites, which are available where you can see what type of salaries are offered to the similar role or functions. I would not say director as such. I would always term it as functions or role that the director is playing. Uh, but yes, formal or informal alliances are open here in UAE to understand what is the kind of salary that is going to be offered to these director per se. And external data is definitely available. It's only a way of finding them out, examining what the findings will be, and finally ultimately relying on the data that you are collecting. So reliable data is available in UAE for
Great to
external
know that.
references.
Sure. I think we spoke about salaries, but salaries in UAE will be incomplete without commissions, right? So I think commissions ideally are, or maybe could be a good structure for certain CXOs in general, to even drive their KRAs when their performance is linked to either your sales or profit. So as the sales go up, maybe the remuneration will go up. In such a case, because there are commissions being paid out, there is a commission agreement in place. And such commission agreements are generally available in public domain on certain transfer pricing databases. So you have to undertake a database search. So in addition to the first two methods, you can apply this method as an overlay for only commission payments. And if your salary is not structured as commission, maybe this could be a good technique to structure your salary in a way where you are covering the basics, plus you can top it up with certain commissions, right? Or maybe you can also add interest to it. So this will go under the cup method. There are service commission agreements which are available in the public domain. These are globally based public domain. And if you talk of percentages will generally be uniform. So if you can do a third party database search on this, then even commission payments ideally could be benchmarked. And this would be a very good method to benchmark your top up salaries, which are commission salaries, not the base salaries overall.
Yeah, this method is very useful in UAE, because what happens in UAE is if you have to plan your cash flow, companies would ideally want to have the base salary as fixed, but at the same time incentivize, as the profits grow up. So percentage linked method is the best way to move, or one of the best ways to move ahead, because that way you control your cash flow also. At the same time, you do not stop incentivizing your directors and growing your profits. So this method, and industry-wise, as you said, industry-wise performance rates are already, data is easily available for it. If you see most of the contracts, if you have to say marketing or real estate contract, commission ranges from 5% to 20% at times, it depending on the nature of the industry. But data is available around this particular method in UAE.
True. Great. I think the next method is very innovative, which is around the service
Service.
agreement. So I was just thinking, because if you take an example of a consultant and if you take an example of an employee, let's say an accounting consultant and an accountant, both are providing similar type of services. So why can't we, for a moment, treat our employees as consultant and analyze what if that employee wouldn't have been there and I would have hired a consultant in place of that employee or a connected person. In this case, there is a possibility of undertaking a third-party service agreement search, which is also available in the public domain, widely used databases. There are service agreements which will throw out your per hour rates overall, along with maybe a monthly rates, right? So there is enough data available around this. The only thing is an employee will have to maintain a lot of data on, say, the timesheet. So if there is one CFO and he's working on reporting, he's working on MIS, he's working on, say, informing certain of his team members, if he's also reviewing the consolidated financial statements, then at the CFO level, we'll have to look at, and he needs to maintain certain time-based details through which he has undertaken the work, ultimately to find out his per hour rate and then compare that with service agreements. So there is a possibility of looking at contract of service and contract for service just for a moment think that your employees are not there and you're hiring consultants. So maybe a third party lookout, but again, a very effective way of, uh, sorry for those balloons. I don't know how to, but good. Anyways, I think everybody is enjoying the webinar. Okay. So, Asna, your views on service agreements, please.
I wanted a pin to burst the balloon. Anyways, so the thing is, I would like to add a little here, Akshay, because if you see the CT law, it is focusing on substance in UAE. Okay. And the best part of it is how would you create a substance to get the benefit of 0% tax rate on qualifying income if you have the substance either you create it for yourself for the company or you can outsource certain activities to create this substance. So this way there are a lot of now outsource activities which the companies are doing through outsourced services. So definitely data is already available with the company wherein you are outsourcing certain services. At the same time, these can be used to benchmark, and form as a and what are the rates that they're getting it at outsourced. So arm's length is easily available. Data is available with the companies here.
Great. As we move ahead into the next method, uh, which is also one of the innovative methods, which means, first of all, you look at your comparable companies. And for all those comparable companies, you look at a particular ratio, which is your managerial remuneration ratio or a KMP ratio, divide that by sales or net profits, and compare it to a similar ratio that you are drawing as a taxpayer. If your ratio is lower or exactly the same as your comparable companies, then you are home and you are at arm's length. So it's a percentage based comparison where you need to find your comparables in the database and do this selective profit link indicator exercise to find out whether your take home is similar to what the other industries are doing. So we have done this in few cases, and it has been quite successful. Asna, any views around here?
Yeah, this method is highly recommended as such, provided it depends upon the kind of industry here. I would say cannot be only the only method to be used, but can be used in a combination of another method. Um, I would We have used it a couple of times already in UAE, and but it depends on the type of industry that we are benchmarking, because not all industry data would be available in this method, but it
Yeah,
is
and I
one of
think also you should have all the other expenditures at very equal or higher level in addition to the managerial remuneration. If your managerial remuneration is going to be the major
majority of the,
expense,
then
then this method will highly fail. And
highly
that's
fail.
not how we look at it. Yeah.
And most of the promoter driven businesses, if you have to benchmark, then this method may not be helpful because promoters would want to withdraw more than the company expenses, especially with advisory kind of businesses where there is no much third party costs. Costs are very limited to license or office rent, then in such cases, this method may not be the most advisable method.
Sure, sure. So I think transfer pricing talks of five methods, but we have discussed so many methods till now, and those are forming a part of those five methods. So it's just like how Saregama with seven surf, you can make so many tunes and music. It's exactly like that. With five methods, you can have so many varieties
Many
of
varieties.
you approaching the arm's length price. Last but not the least is the TNMM approach. One of the favorites when it comes to payments made to promoter-driven companies, because ultimately a tax authority cares about getting their share of income, which is taxes on the corporate profits which are made. And if the corporate profits are in line with other comparable companies, which TNMM really focuses on, then the remaining amount could be taken back by the promoter as salary, commission, interest, or any other remuneration. So we ultimately focus on the net profits made by the company here, and we do not focus on the expenses undertaken by the company. So this is a general approach that we have used and been quite satisfactory till now because the information availability is also quite high.
Yeah, so this is one of my favorites methods as well, and many cases has already been done around this method. Data is easily available from, and it is very interesting to benchmark the salary around this method, because finally the projections matter. Finally, the companies have to now focus on how what is the profitability range. So this method works a lot in UAE, and I'm sure this is just that the profit as per that picture will not perhaps go up. It has to go down so that they pay little lesser taxes. But otherwise, this method works apt, and one of the favorites here.
Sure, sure, great. Now, uh, I think it's very important for all of you to also know the types of softwares that are generally used in the industry. I have added India specifically here, but other than India, you have softwares like OneSource, you have BVD. For royalty searches, you have Royalty Range, KTMine, Royalty Source. For interest and corporate guarantees, you have Bloomberg, you have Royalty Range. And for service searches, including the commission, Royalty Range gives a good amount of data. No one database is uh, recommended by any authority, but it's all is about where the data is available as per your experience and what is the data you are looking for. So there is no preferred database ever, uh, but there are general principles which are used while searching in a particular database. So these are few guiding databases that you could look at. This is not a marketing slide at all. It is only for information for all of you. Right? And I think, Ashna, would you just like to sum it up with certain key takeaways from today's session before we jump into a lot of Q&As which have come in?
Yeah, so I would say do not take transfer pricing or corporate tax as just as a compliance and a burden on the company. It is time now that you start planning for it. It is already companies have already started planning for it, but those who have still not done it, there is never any delay when you want to adopt compliances in your corporate tax journey. Start planning for it. Once you plan for it, you will understand what has to be documented, what focus on the key area, focus on how the regulations will help in improvising the company and its company and the situation in your company. Focus on the cash flow, focus on your profit and loss account at this moment. Build training modules for your staff, finance department especially. And it's not only finance department, finance, HR, admin, all these go hand in hand when it comes to a corporate tax journey. So it's very important that a company starts planning, train their staff. After training, understand what methods you have to adopt to regularize your accounting or corporate tax TP, and see that do not wait till the TP audit hits you. This is the time you start your TP journey and have happy days. This is all what I can say.
No, so Ashna, for that roundup, I think it's very essential. I would like to speak a little bit on the risk management uh, in this case, uh, because TP ultimately will contribute to a risk at a global level. Transfer pricing as a law will always lead to double taxation. So if there are adjustments happening at maybe at let's say UK level or US level, it will always have a rippling effect on the group profitability. And at an overall level, your effective tax rate of the group will go for a toss. So it's very essential that transfer pricing as a law is very well taken care from a risk point of view. At an organizational level, you try and reduce your transfer pricing risk to the extent possible, so that you can do your business smoothly and don't really have to think about whether I'll be taxed here in this country or that country because of certain transaction. Try to be as conservative or maybe try to be as business friendly as possible and leave out all these worries by managing your tax and TP risk very effectively. And of course, do make a transfer pricing friend, maybe somebody whom you can bounce off your ideas very well. Yeah, and yeah, I mean that's all from today. We look forward for such uh, webinars with you where we can share our ideas on topic like these. Anybody who is interested in knowing more about benchmarking around managerial remuneration, they can surely get in touch with us. I mean, these are our coordinates. And I think let's move on to the Q&A session. I think that's the most important. We have got several questions for us to answer, Asna. Plethora of them. Let's take a few because we still have 5 to 7 minutes for the completion time. Yeah. Question one, how do you suggest to benchmark the connected person's remuneration and what is the TP method to be used? I think we have already covered this extensively in the last 4 to 5 slides.
I
But
think
again,
you're
depends.
referring to Q&A. I can see a lot in the chat as well, Akshay. We can pick up some
Is
from the
it?
chat. The chat is
So let's
full.
go through Q&A and the chats both.
Okay.
Okay. What's the definition of officer director to determine connected persons? Very subjective, as I said. This definition should be based on the exact facts of the case and depending on the type of control that person is exercising. Now, that person may not be having the title of officer, but he could be doing the duties of an officer or a person who can influence either the revenues, profits, expenditure, assets, or liabilities of a company. So it's not defined in the law. It's going to be very subjective, but it's a very judgmental call for any company to take.
Just want to add here, Akshay, a federal law has a definition for directors and managers' duty as well. So there is a vast list of duties that a director would generally undertake, right from meetings to finances to insolvency. There are many, the list is unending. And federal law has all the details, the commercial federal law, which I'm talking about of UAE. So yes, so when you design the duties around it, one has to refer to the federal law of UAE.
The next question is how do we compute for owners? Now, ideally, owners, directors, shareholders, managers, the payment will have to be computed or maybe benchmarked on similar principles that we have just discussed. So, owners are also included in that and that particular definition. Can you explain how a cup can be applied as a company cannot be paying to an owner of another company an external cup? There is no such information available. So, as I said, any service agreements that you have where there are payments being made to third parties for similar functions undertaken, that is what you need to compare. You don't need to compare payment to the owner of the other company, but payment to anybody who is functionally akin to the functions undertaken by the owner. Because the payment that the owner is getting is for the performance of that owner and not for holding the position as an owner. So the entire benchmarking is not for being an owner because the remuneration against and being an owner is a dividend. It is never an owner's remuneration. A remuneration is always for undertaking certain functions, which is in addition to the dividends that an owner could be eligible for. Could you please explain on how TNMM could be applied here? We have to test remuneration and not profits. So when a TNMM applies, it's an indirect way of benchmarking. If you can benchmark the profits is a function of revenue minus cost. And if profits are at arm's length, it will be assumed that the cost is at arm's length. That's the basis and the presumption under which a TNMM goes for. Similarly, when you are doing, say, a royalty benchmarking, in many countries, TNMM becomes a very favorite because if they're able to benchmark the profits, they can benchmark the cost around it.
Can you
Can you
take
please
some?
provide? Yeah.
Yeah, yeah,
Oh,
go ahead, Akshay.
I think there are many in the chat.
Yeah,
Okay.
in the chat, that's what I'm saying. Let's shift to the chat. There are like,
Should the UAE local holding 51% be considered as connected person even though he does not have control? So this is something that Ashraf we were discussing just before we get into the live presentation, isn't it? Would you like to throw some light on it?
It's very difficult to generalize, one shoe will not fit all the legs. So it is, one has to we will have to study the entire transaction. Just because he has shareholding and he has no control, then how what his role would be, what would be his control over the business and the decisions that he's taking is very important to understand. We cannot generalize it at this moment. We'll have to study the facts of the case.
Yeah, one way to look at it, Asna, could be a 51% will give a de facto control, isn't it? If a person is already having a 51% on the shareholding, which means although he's not exercising the control, he has a legal control over the company,
Legal
right?
control is there. There is
So,
in these contracts, legal control is there because finally the memorandum is what overrides the everything. Finally, if he wants, if he can override it. So that's why I said it. But subject to the memorandum, there are certain companies which do give him the shareholding, and in the same memorandum, the rights are different. So it's very important to study what is there in the memorandum.
yeah, I think Yeshu, he has given answer to it. It says absent control is irrelevant. Ownership alone, regardless of control, will constitute a person to be connected person. So he's very strong on that view. So great, Yeshu. I always like your views and insights. So good to know. He has also there are another one is can a sole establishment pay a salary to the owner? It's already you have covered
We
this
have covered
that
this
it's
one.
prohibited.
Yeah.
Can Glassdoor be used as a database for comparable salaries and remuneration? Answer is typically yes. Uh, that if we are able to get good amount of details around Glassdoor, then why not? It can be used. Any database, as I said, there is not going to be any preference. Any database where you are able to prove logically the way how salary is being set, I think could be a good way to do it. Okay, then there are certain chats, difficult to benchmark. I think the biggest struggle is how much an owner should withdraw. Sheetal, of course, I mean, that is something that we all are discussing about. But we can also discuss this offline on how much an owner should withdraw because there are business principles. Ideally, if you're doing business, owner cannot be withdrawing 95%. Optically, it doesn't look good. Yeah. So, of course, I mean, the owner has all rights if there is no other expenditure to withdraw it. But whether an owner should be doing that. Yeah. What kind of adjustment need to be made while benchmarking remuneration comparables? Are these objective or subjective adjustments? First of all, in transfer pricing, you will have objective and subjective
Objective also.
adjustment. More say ever subjective. So what is not statistical in nature is going to be subjective, right? So if there is a growth rate of 9%, which everybody is taking, that's an objective way of looking at an adjustment. But if it is more of a function driven assignment or an adjustment, then it's all going to be subjective. So if a CFO is responsible for 10 companies, let me take that example. And if there is another CFO who is responsible for 7 companies, statistically speaking, the CFO with 7 companies should have 7 is to 10 as a ratio for salaries, right? But that's not ideally how it is. Subjectively, there will be difference in functions. We'll have to see what functions the CFO of 10 companies is undertaking. He could be undertaking functions of a finance controller and a CFO put together, whereas the CFO with 7 companies could only be doing the CFO function. So all those roles that are being played through needs to be highlighted, written down in an Excel file. Weights need to be assigned to it and then decided on the type of adjustments to be made. So this is going to be a very, very subjective exercise when it comes to deciding a particular director or salaries. Uh, Speakers are mentioning that market data is widely available in UAE. Anyone can tell which. Okay, so I've already given you the portals before you could ask this particular question. So market data of UAE may not be available freely, but UAE follows OECD guidelines, and you can look at the region-based data and again undertake any type of economic adjustment to fit the UAE market. That's the reason why we are saying that market data is available. we as transfer pricing professionals, right, we have been doing business with UAE even before the advent of corporate tax with UAE. Whenever the tested party was in UAE, we used to run certain Middle East searches. So it's not that the search data was never available. We used to undertake these searches at a global level, at a Middle East level, or at the GCC level, and ultimately come to a conclusion even when we are doing a other type of global benchmarking. So data is available, and I have given you access to all the portals where the data could be available, not the access, the information on the portal. Anybody knows if royalty range could be used to benchmark salaries? Yes, it could be if it is for commission-based service payments.
We have also mentioned the same software in our previous slides. So
That's correct. That's
yeah.
correct. Yeah. Royalty range is for licensing royalty. No, that's not true. Royalty range is for your service payments. It's also for your interest rate benchmarking. It's for your corporate rate benchmarkings and also for royalties. Under UAE TP law, are listed companies not to be considered as comparables for doing TP benchmarking? No, nothing like that. Listed companies could be considered as for doing benchmarking studies, so which are comparables to benchmarking studies. In most of the other jurisdictions, I think listed companies are the companies which are having information widely, and they are considered as potential comparable companies. Yeshu, you have done a good job in terms of answering most of these questions in the chat box. So thank you for that. Placing a perspective is very important. Can you explain where does BVD show salaries? Of course, I don't have direct access here to give. Can a single owner LLC pay remuneration to the owner? The answer is yes, right, Ashna?
No, LLC, what happens, Akshay? LLC is a different nature of license. So when it's an LLC, the liability of the company is limited. So in these cases, you will have to benchmark the salary as usual. But if it's a sole establishment, which is inseparable from the natural person, that's a different license. LLC, where you have a memorandum, where you have defined the capital, where your liability is limited to the capital, then he becomes like a person who is acting as a director manager for the company. Though he has 100% shareholding, his liability is limited to the capital. His liability is not 100% unlimited like that in case of sole establishment.
Salary to owners or dividend to the owners, which is better? So ideally, a owner's remuneration is always going to be dividends because he's holding the shares. Salary as a payment is towards the function that the owner has done in addition to the ownership, right? You will have to separate both of these and you will have to balance both of these. If you want to withdraw everything as dividend, you will have to pay 9% corporate tax and then withdraw it as a dividend.
And dividend cannot be claimed as an expense, right? So here we are talking about expense. So dividend may be only be possible when a director is a sitting director and you cannot, he's not 100% involved in the company. Then you have no choice than to withdraw it as dividends, provided he's acting as a director, working here for the company. If it is only as an acting director, silent director, then dividend works for him to withdraw the amount from the company, but otherwise salary is beneficial.
Right. Right. Do we have to do TP study in both the countries if there are transactions with related parties and associated enterprise in UAE and India? Yes, we need to do TP studies in both the jurisdictions. Will this PPT recording be available for future references? Yes, I think we are planning to put it on YouTube and we'll surely share the link with you. Is dividend to owner an allowable expense? No, dividend is post the profits and the taxes. Yeah. Substance or can a remuneration to owner for job roles performed in the capacity of CEO and CFO be justified with the HR database available in the UAE without resorting to full report? So TP report is just a way of you proving a benchmarking analysis. The way how you are doing benchmarking still needs to be documented in a way. So any type of analysis is fine until you are able to prove it that things are at arm's length. And you need to document in a way how OECD and the UAE government has got out the transfer pricing study report for you in that particular format. Right? Can remuneration drawn by a shareholder from a company be deemed as a business income in the hands of shareholder in his individual capacity in absence of labor contract? Ashna, this is for you.
Can the remuneration drawn by shareholder from a company be deemed as a See, here what happens is you have to understand, is a director a full-time director to a particular business, and is he working for the and he's fulfilling all the functions of the person of the for the business or not, is very important to understand. If you are acting as a full-time director of a particular company and you are drawing the same salary as if as a third party or another employee who would have been employed, then I don't see a challenge here taking it as a deduction. But if a director is having director position in 10 companies without visiting that company, then how would you justify his salary? Then then it can be there is a thin line here, then whether he is performing it as a business activity or not. You have to study whether he's really a full-time director or is he just the salary. Even if he's part-time, whether his salary is justified or not is very important to understand. But if one director is acting for 20 companies as director sitting fees, then there is a chance that there is a business activity involved here.
Yeah, so I think Ashna, it's already past 6:30 India time. It's 10 minutes past 6:30, and I think we have overshot the time because of some question and answers, which is fantastic. Quite interesting insights, also coming in different views. So thank you, everyone. It was a great session, and I look forward to conducting many more webinars like this on interesting topics. Uh, so thanks. It was wonderful. So Ashna, you have few words to just speak about.
No, I would say 2024 has kickstarted, and we would continue our webinars with this is really, unless we deep dive and discuss, this was not like it was this webinar was more like an interaction, which is very important rather than making a PPT and giving your own points. This the whole purpose of this webinar was an interaction and to understand each other's standpoint of view. Finally, this is a new regime and everybody is learning here, but everybody's viewpoints is what helps in learning further, and the objective of the webinar is more on learning. I think we have achieved our uh, goals in today's webinar by seeing the questions
Yeah,
that have come and active participation from everybody in answering the question. So
yeah, yeah. Okay. So thank you, everybody. Have a good night.